Interest rates dropped unexpectedly this week, and inventory declined while demand rose. Let's talk about that and more in this week's segment of Market Watch. Hi everyone, it's Joshua Barks here, associate broker with Keller Williams Realty Boise and the Barks & Co. Real Estate team. Thank you so much for tuning into this week's segment of Market Watch. And if you're new to the channel, we talk about the Boise area housing market on a week-over-week basis, and once a month we go into a deep dive into our market dynamics. Now, last week was our deep dive into the market dynamics for October 2021, where we saw a 30.5% increase in the average sales price for Ada County, and in Canyon County, we also saw a 30% increase in the average sales price. That's absolutely incredible. Mind-blowing, actually. Now, if you missed a deep dive, link to that's going to be in the description below. And this week, let's just get into our local numbers for what's going on in Ada County on the week-over-week basis. First off, interest rates dropped unexpectedly this week because we saw a rise in purchasing of the U.S. Treasury bonds. So we saw foreign investors buy up U.S. Treasury bonds compared to the global bonds market and what have you. I'm not going to go into super detail on that because that will just get us off track. But basically, Treasury bond had a rally, which caused our interest rates to come down, even though they had been on the rise. So they were 3.14 for the 30-year fixed, according to Freddie Mac, on a national average. Now they're 2.98 this week for the national average. Now rates are going to remain relatively low, but likely to continue to rise through the end of the year like we had been seeing, probably hovering right around that 3%, maybe up to 3.25 by the end of the year. It's possible we see rates go a little bit higher than that, but that's not likely based on what we've been seeing, even though reports in the beginning of the year were saying that rates were going to be hiked up significantly as the economy was recovering. But our recovery has been much slower than anticipated. So we're seeing rates remain pretty low, which is helping affordability while prices are soaring. So when we talk about the actual numbers in our market right now, inventory has gone down again this week. We have 706 active listings overall in Ada County compared to last week when we had 784. So that's down quite a chunk. For the fifth week in a row, inventory has come down. And we're likely to continue to see that trend through to the holiday season. I think, like I said a couple videos ago, at least I think I did, where inventory will continue to go down because we're entering into our normal holiday market. Typically, December and January are our lowest inventory months that we have for the entire year in our area. That's just what we see in our normal market. Now, we're likely to see inventory continue on that trend because we're getting back to normal-ish. And when I say that, I don't mean we're getting back to a balanced market or a buyer's market. It's still a hot seller's market, but we're going to see inventory come down and demand probably stay about the same. Now, if you're asking me what number, how many available homes we're going to have in December, anybody knows, right? No one can predict the future. But if I were to venture a guess, I would say we're likely to have the number of active listings be around 600, give or take maybe 50 homes. So like from 550 to like 650 active, maybe a little bit lower than that, depending on the winter that we have. We were projected to have a pretty harsh winter this year in our area. So far, that hasn't been the case. Actually, it's been warmer than what we typically experience this time of year, which is interesting when they said that we were going to have a harsher winter. Maybe that's going to come later. I don't know. So inventory likely to continue to decline. The number of pending sales likely to continue to stay pretty consistent, maybe a slight decline in that as well as a few buyers leave the market and get distracted with the holidays. Now, if you're a buyer or a seller right now, it actually might be a good time, depending on your situation and what your needs are, because the sellers and the buyers in the market right now, so like holidays through the end of the year, are serious. So there's less competition for buyers. So you're not fighting as much for the listings that are available, even though there's less of them because there's less buyers than we have right now, typically, and way less buyers than what we typically have in the spring. So a good time if you're a buyer. And on the flip side of that, it's a good time if you're a seller too, because there's fewer inventory. So there's less homes that your home is directly competing against at any given time while we have serious buyers in the marketplace. So still could be a great time for sellers as well, depending on your situation, what your goals are. Now, when we're talking about the number of actual pending sales, they're up significantly, especially compared to where we are inventory-wise. So we have 823 pending homes right now compared to the 706 active listings. So 100 more pending than we have active. Last week we had 790 pending overall. Now, the biggest factor here with inventory coming down and pending sales is we're seeing a huge, still demand is way outpacing supply. It's long story short. So we had 140 new listings come to market this last week. 205 got taken off the market because buyers bought them. They went pending. The week prior, we had 138 come on the market and 200 come off the market because buyers bought those. So we're likely to continue to see that trend where pending sales hovers around that, high 100s, early 200s numbers per week as we get through the end of the year. And then when we're talking about the number of home sales, we had 163 homes close in the last 7 days. And last week we had 199. Now, yes, we had less sales this week than we had last week. Part of that, I think, personally, is because we had Veterans Day yesterday. Thank you all for those of you that have served, are currently in our active military and what have you. That's fantastic. And with Veterans Day being a national holiday, specifically a state holiday, no closings can happen that day. So they either happened Wednesday, the day before, or they're happening today. So they don't count as solds for the ones that closed today instead of yesterday. So we're likely to see homes sold next week higher than what we saw this week, especially because I believe next week is the week before Thanksgiving. So we're likely to see a huge push in the number of sales that week compared to Thanksgiving week, because things Thanksgiving week typically calm down for that 1 week and then pick back up the week after that. So when we're talking about projecting into the future and what's going on there, I'm still hearing lots of speculation about our market crashing because we've seen so much appreciation so fast. Now, because of supply versus demand, economics 101, when you have low supply and high demand, prices are going to go up. Yes, that's what we've seen over the last year plus. Now, we're going to continue to see that, but not at the pace that we've saw this year. 30% is absolutely ridiculous for a year-to-date number. I don't think we're going to continue to see that type of growth because it doesn't make sense. And I don't think inventory is going to get down to 80 active listings in 6 cities in Ada County. So we're likely to see prices maybe stabilize. And that's kind of what I've been talking about for a few months now. Eventually, we're going to get to the point where our prices kind of plateau out. And I think that's about what we're seeing right now and what we're likely to see, through next year. Now, prices are going to continue to rise very likely because we still don't have enough active listings to satisfy the current demand levels. And when someone is saying, the market is crashing, I'm seeing other YouTubers say it, other real estate agents, most of which happen to not live or work in the Boise metro area. So one of them's in Florida saying the Boise housing market's going to crash because we've seen so much appreciation. Now, I don't know. I definitely take that with a grain of salt, seeing as they don't live here, work here, and study our local numbers as much as they probably study their own local markets. And if they're covering national basis, the broader scope you get, the less accurate you can be for a specific area. But when talking about a market crash, let's pretend a crash is forthcoming, right? What does that mean to you? Specifically, what does a market crash look like to you? Now, if you're expecting housing prices, our average sales price in Ada County right now is $558,000, so over $500,000. If you're expecting our market to crash and then housing prices to go down to $250,000, which was our peak in 2006, 258 was our peak in 2006. If you're expecting those prices again, you're going to be waiting until the sea levels rise and wipe Idaho off the map. Now, I hope I'm wrong, because it'd be awesome if we got prices back down to that level, because then I could snatch up deals and people in our area could, get into affordable homes again, right? But the likelihood of that happening is super, super low, especially if you're looking at, your typical 3-bed, 2-bath, single level home within like 10 to 15 minutes of downtown. 250 just doesn't make sense for that anytime in the near future. Now, could the average sales price come down from 558 to 450? Yeah, maybe. Not going to happen by the end of 2022. Probably not even by the end of 2023, because that would mean we'd have to lose 20% in our average sales price between now and then. 20% in our average sales price. We'd have to fall 20% in the average sales price in order from 558 to come down to 450. And in 2008, when we had the last housing crash, our area saw the average sales price come down 16% in 1 year. So we basically need to have another 2008-like event to take place and actually hit us harder than it did then in order for prices to come down in 1 year to 450,000. So that's probably not going to happen anytime soon. I do expect we're going to see prices on a more modest scale. So 3 to 6% either up or down as we kind of plateau out, as fewer people move here and some people move away. But essentially, unless wages come up to meet home prices, local buyers are going to be, they're going to be moving further out. In fact, if you look at what's going on in Canyon County compared to Ada County, Canyon County is actually gaining more dollars per capita than Ada County is, because we have people moving from Ada County to Canyon County because it's more affordable. And so we're likely going to continue to see that trend. People move into Ada County move out to Canyon County. That's just kind of what we've been seeing for a while. Now, I hope that makes sense and satisfies some of your concerns. If you pretend that we do have a market crash event and we lose 10%, let's say we lose 10% in a year. So by the end of 2022, we're 10% less than what we had. Well, we're still up 20% from what we had in January. That's still 20% gain in equity. Now, let's say next year we appreciate by only 10%. So that's a third of what we've appreciated so far this year, only 10%. And then the year after that, we depreciate 10%. Well, then you're even. So it's not always the best time to buy. It's not always the best time to sell, but it's really hard to time the market specifically. And when you're just trying to time the market, that's a fool's errand. If you're looking at, now I'm rambling, but if you're looking at a market where we have $250,000 average sales price again, which is not likely, you're going to be competing heavily against Wall Street investors and foreign investors who are going to be swooping in and snatching up properties for cash, so that they can diversify their portfolios and get an asset that will likely, again, appreciate in value, and then they can rent it out, because our rental rates, while they did come down this month by like 3% month over month, they're still up at least 20% from what we saw this time last year. So again, maybe they come down a little bit. Maybe prices come down a little bit. They don't stay 558. Maybe they come down to 550 or 545 again. We're still up significantly from where we were. And again, in order for prices to come down, we would need inventory to come up and demand to come down, because right now we have no inventory and still high demand, meaning prices are going to continue to rise. So that's what we're seeing in the market. I hope that kind of clarifies things as far as what we're expecting, which is prices to continue to rise, unfortunately, for the foreseeable future. At least the next 6 to 12 months, we're going to see prices rise. Now, one thing that could affect that is interest rates. Rates right now being 3% is fantastic. If they go up to 5-6%, which is unlikely, but if they do, we're going to see a lot of buyers drop out of the market. And then especially in those we're going to see a lot of price points kind of shift downward. Now, if you're an entry-level buyer or an entry-level homeowner, so you have that 3-bed, 2-bath, single level, 2-car garage, within 10 to 15 minutes of downtown Boise, you are likely going to be fine. You're going to be less affected than those that are in the like $2 million plus markets, because those buyers are going to move down in affordability, because now their price range that was 800,000 to now 500,000, lower. And that entry level is still going to remain competitive because we still have a lot of people downsizing into those starter homes. We still have investors, not as many as we had as our prices have risen so much, but we still have investors that are looking at those because those are typically easiest to rent out of all the homes on the market. And then thirdly, of course, first-time buyers are entering into starter homes. So that entry level is likely going to remain competitive for a long while. And if you have any questions about that, want me to go in further detail, just let me know. I'm going to stop it here because otherwise I'll just keep going. And because I get excited when it's talking about numbers. If you are thinking about buying or selling, especially if you're thinking about making a move early next year or maybe even next spring, now is a good time to meet with your real estate agent so that you can prepare and learn everything you need to learn in advance. If you have a home to sell, maybe now is a great time to start getting it ready for market, maybe doing some of those minor handyman fixes and things like that. And that's something that I love to do, and I actually take great pride in helping my sellers prepare their home for market. In fact, we bring our in-house designer. We have a whole consultation on all of the things that we can do to get your home the most money. And if you're thinking, well, I have to, upgrade my kitchen or update my bathrooms before selling, definitely talk to me first, because that might not be necessary for your home and area, especially for the return on investment. We might be doing some things and not other things, but you have to look at the market as a whole, how your home fits into that, and then what your home is going to be compared to. And then look at the cost of, what remodel projects you want to do, and take that into consideration when, what would you get out of that? Most of the time, a full kitchen remodel or a full bath remodel, if you're doing it for yourself, that's great. It adds value and you're living there and enjoying the remodel that you had. But if you're doing it just to sell, that's probably not what you want to do. In some cases it is, but not very often. So reach out to your real estate professional that you trust. We would love to be interviewed as well. Like I said, we bring in our designer. We get a whole list of things that we're able to do to make your home stand out, and basically just our recommendations on what's going to make your house outshine the competition and get multiple people falling in love with it, hopefully. And then you get to take that list and decide what you want to do and go from there. So it's a great opportunity, and I take care of coordinating all of that. So you don't even have to worry about, oh, well, if I want to repaint the kitchen, or, I have to replace the carpet or whatnot, and I don't have time, or I'm too stressed. I take care of that. I arrange all of the contractors. I'll get bids for anything you want to do. And that's something that I absolutely love to do, is just getting in there and coordinating all of that and making sure that we can really make your home outshine the competition that when we go on the market. And now is a great time during the winter when things are quiet, because then you can get all of those repairs done and get everything ready to go, so that early next spring or whenever you're ready to move next year, we can just go and run full steam ahead when the contractors are busy getting other people's homes ready to go. So we can get that done now and out of the way, and maybe you can even enjoy some of those remodel aspects before selling and move on. So that's kind of what we have for this week. And as always, if you have any questions, or if there's anything that I can do with regards to real estate, anything I can help you with, I want to be a resource for you. That's why I put these videos together. That's why I send out my newsletter every week. And I hope everyone has a fantastic weekend, and we will see you next Friday for our next segment of Market Watch.